We have read your material, and we have some sense of how you structure it, particularly in your most recent book. You've got 5 basic forces that explain a lot of economic history. You go back several hundred years and look at it. And I thought we might take some of those and apply them to the present day. And as I recall them, and you'll correct me, the first one has to do with money, credit, debt, the economy, right? And then internal conflicts within a country, external, and then forces of nature, which would be climate change probably today, and then technology. Start with the first one, the one that involves debt, credit, money, the economy, and apply it to the here and now. One of the big raging questions is, are long-term interest rates, and for this purpose I guess I mean really real interest rates, are they going to remain elevated? We're down at negative, we're now up above 1. Are they going to remain elevated in the out years as you see it, or do you think they'll come back down? There are camps in both directions at this point. And you look at the long term. Long term, where are we headed?
Well, it's most important to me to not just answer questions like higher, lower, or whatever, but to try to explain the mechanics, the cause-effect relationships that are going on, right? And the reason I did this study, which then turned into a book, and I'm just a practical markets decision maker, is that 3 big things are happening in our lifetimes that never happened before. Let me say that again. 3 things that surprise us that haven't happened in our lifetimes, but happened many times through history, are the creation of an enormous amount of debt and debt monetization. The second is the internal conflict, the large wealth gaps and the internal conflict that makes the politics of populism and so on. And the third is the great power conflict, comparable powers, the United States and China, and the possibilities of war.
This legendary investor may be looking to buy Tesla shares, and it will be a very big deal for Tesla. Join us as we unravel Tesla's latest catalyst that's going to be drawing investors in and causing the company to take over the auto industry. Today we're going to do a deep dive into something cool, and that is why Elon Musk is the secret sauce behind Tesla's amazing growth story. This is not just coming from us, but the renowned Tesla investor and hedge fund manager himself, Ray Dalio. You see, Elon Musk isn't just the CEO of Tesla, he's the driving force behind its incredible growth story, the actual real deal, and we're about to spill the beans on why he's so crucial to Tesla's success. With his vision, risk-taking spirit, and a dash of tech magic, Musk has got Tesla on the road to even bigger and better things, and in this video we're going to share some critical factors that have led us to this conclusion. We will also consider important reasons why Ray Dalio may be looking to add some Tesla shares to his investment portfolio. So without further ado, let's get started.
I kind of see it as a false equivalency, though, to look at this in the EV world between Ford and Tesla. Look, even if Ford had all of their cars as all electric as choices, I'm not sure that the customer of Tesla is the same customer who's looking at a Ford Escape or some other car that Ford makes, the F-150, for example. They're just not the same consumer. So I look at this, and if you're in the price camp and you make enough to go buy a new Tesla, or a Tesla from the last few years, you're not really the same person that's looking at Ford vehicles. So the big question is going to be what this deal looks like on the other side for some of these companies, what they do to continue to stay relevant and competitive in this space going forward. But we've said all along, if Tesla's being priced as a car company, it's way overvalued. It's not. It's being priced as a tech company, and then you have to think about, okay, what kind of tech company is it? It's also inventing things in the battery space. It has investments into solar. It is not just the vehicles we see driving on the street.
I think that's exactly what I was going to say, and I think that's such a good point because, we make the argument that with its valuation, I think the bulls of this name say it's not an auto company, it's not a pure play into the automotive industry. So then for that reason, can we really say that they're going to benefit from a pure play automotive headwind? I don't necessarily think you could make that same argument because, like you said, Alex, sort of different veins of business at this point. So for those that argue this isn't a car company, then I don't necessarily think that they can benefit from the pure play car company's weakness. I mean, a name like Ford, GM trade nowhere near the same multiple as Tesla. Their performance on a year-to-date basis is not even comparable at this point. Tesla, though, is up 124% this year. They've pulled back about 12% from their highs, which is a much better position than they were in about a week and a half ago, even with this nice jump this week, up 171% from their low. Tesla's a frequent flyer on this show because it sees such great volume. It always has news. We mentioned relatively light, actually, Tesla news today, but this name just sees such outstanding interest from so many traders and investors, and even with today's slight move to the downside, it's always
Billionaire investor and hedge fund manager Ray Dalio recently shared his own thoughts about Elon Musk, the CEO of Tesla. The investment expert is the CEO and founder of Bridgewater Associates, the world's largest hedge fund, and in his recent statement, he has praised Elon Musk and his curiosity and ability to learn, as well as his passion for making discoveries. Dalio spent years studying the habits and personalities of successful, wealthy leaders. In fact, the hedge fund billionaire has interviewed and administered an hour-long personality test to people from Tesla CEO Elon Musk and Microsoft co-founder Bill Gates, all the way over to Netflix co-founder Reed Hastings and Nobel Prize-winning economist Muhammad Yunus, all in an effort to understand what sets certain leaders apart from the average person. According to Dalio, he's administered a personality test to Musk and was surprised by the results, describing the CEO of Tesla as a passionate and unwaveringly committed person. He's also particularly struck by the CEO's curiosity and ability to learn, and has concluded that when it comes to Tesla, Elon Musk is like the head honcho with the big dreams. Hey guys, welcome back to Tesla Tomorrow. You see, Elon Musk is not afraid to take risks and make bold decisions. He's not afraid to ruffle up some feathers either. And it's this attitude that's given him the personality of a risk taker. Musk's public persona and communication style have all contributed to Tesla's strong brand recognition, and his strong engagement with Tesla enthusiasts and stakeholders helps to maintain interest and the trust in the company, which is vital for continued growth. Under Musk's leadership, Tesla has expanded its global footprint, opening up new markets and manufacturing facilities worldwide. This expansion has allowed Tesla to tap into a larger customer base, reducing production costs, as well as also improving crucial elements for growth. This is why we believe that Elon Musk is the reason why Tesla's EVs tech is actually out of this world. He's also just shaking up the whole car industry with his electric revolution in a way that causes Tesla to not just grow, but do this all while causing a whole industry earthquake. So what factors could Ray Dalio be looking out for in Tesla? Let's find out. But before we carry on, if you like this type of content, don't forget to hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Tesla's disruptive impact on the automotive industry can be attributed to Musk's willingness to change and challenge the status quo. His unconventional approach to business and his commitment to EVs has reshaped the industry landscape, driving growth not only for Tesla, but also for the entire EV market. It also raised Tesla's status in the industry, so much so that everyone wants to be associated with this company. Likewise, Tesla's also enjoyed numerous benefits in the industry, and it's starting to seem like it's the only one there. One interesting bit of news coming up from Tesla is the $160 million in the EU that the automaker is receiving in terms of funding, and it gets to expand its supercharger network to 22 countries. The EU is providing $378 million in funding to support green transportation infrastructure, and Tesla is getting a large chunk of it. According to reports, this project aims to deploy 6,458 recharging stations at 613 locations in 16 countries along the core and comprehensive network. This project foresees that the deployment of new charging stations and the replacement of existing outdated ones is actually going to be maybe not sufficient in terms of recharging capacity and open accessibility. And for this reason, Tesla's Polish and Italian divisions will receive a total of $159.64 million to install and upgrade 7,198 superchargers across 22 countries. Although this is a pretty large process, and it takes up quite a large percentage of the funding for one company, the EU's decision does seem logical. Tesla takes the leading position in terms of making EV charging easy and accessible. The automaker recently celebrated its 10,000th individual supercharger connector in the European Union and counts 875 stations in total. Likewise, other companies like Ford, GM, Volvo, and Mercedes have all said they'll switch over to the NACS port, and have also struck deals with the company to use its superchargers. This means that in the future, a lot of drivers will be under the same Tesla network. Tesla is also starting to gain more ground with its AI, and according to Dalio, while AI has become both a Wall Street buzzword and a source of widespread existential fears over the last year, its benefits could be mind-blowing. He further stated that AI was going to be a transformative power, describing the tech as something that could be similar to nuclear, although it is more powerful. The interesting thing here is that when it comes to AI, Ray Dalio seems to share the same views as Elon Musk. The legendary investor commented on the rise of AI, a technology that Musk has been vocal about. Musk has warned that AI could pose an existential threat to humanity and has called for more regulation and oversight. In the same way, Dalio echoed that statement, stating that AI could create enormous benefits or massive disorder depending on how it's used. Since Dalio and Musk share the same views on AI, it's pretty fair to say that Dalio will likely consider Tesla's approach into the AI sphere. This means that if at any point the hedge fund manager decides to buy more shares of an AI company, it will likely be that of Tesla. What do you think about Ray Dalio's thoughts? Let us know down below. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.